Hello folks, you're welcome back. This is my first commentary for this week, 13th of May 2025, and we're going to start analysis today with going through the economic calendar, forexfactory.com, just to outline high, medium impact news events, just so we know when we are in a high volatility trading environment or a low volatility market condition. The absence of a high and medium impact news event will signify that we may experience a medium impact. So yesterday we saw on Bloomberg that the US lifted up their tariff on China, thereby reducing it to almost about 30%, and that was a good news for the yen, the yen asset, and as well also for the dollar. So we saw a bullish dollar yesterday, and funny enough, I think yesterday morning I dropped my anticipation for the dollar, gold, and foreign currency in the mentorship community, the one-on-one mentorship community. This technically are some of the benefits of joining us in the one-on-one mentorship community. I don't get to do this on YouTube. I do this in the mentorship. All right. So yesterday I dropped my expectation. I expected bullish DXY. This was my chart, and also for gold, we were expecting a bearish gold yesterday. USD/JPY also were anticipating a bullish market, and I was excited to see that the students in the mentorship community took advantage of this. And I'm sure yesterday I saw, all right, so this was one of the trade from one of the students who sold AUD/USD. So if the dollar is bullish, what that means is foreign currency like the Euro/USD, GBP/USD, AUD/USD are going to go opposite. So bearish, he sold AUD/USD and actually made withdrawal on his trading account. I think he deposited about $500 yesterday and made $431 just yesterday's trading day. And look at his withdrawal on Xness. So this is the game changer, being able to be in a community that shows you what we are looking at and what we are anticipating in the market. This morning I dropped this. All right, so today we're going to be looking at the economic calendar, and I think we have CPI today, so we are not going to be engaging until after the CPI. We are not going to be doing anything until after the CPI. The CPI is coming up around 130 today on the dollar, so we would sit on the sidelines and wait until after the CPI before we engage. Then on Wednesday, you can see we do not have high or medium impact on the dollar and foreign currency, just on AUD. And as well, Thursday, we do have high and medium on GBP. Friday, Thursday, it's going to be a very volatile day. Look at all the high and medium impact of these events. It's going to be very crazy on Thursday and Friday. Okay, so we go back to the dollar index, and what I'm looking at currently, yesterday, this was what we've been looking at. And if you've been following me for the longest, you would hear me say that we've been anticipating to see the dollar trade into a premium level before we sell the dollar. The dollar has been bearish right from the monthly time frame. If you take a look at the monthly time frame, this was our basics for selling the dollar. The dollar accumulated, manipulated retail, inducing them to take buys while finding resistance at the bearish order block with that inverted fair value gap. That fair value by the left that was violated here. Price tapped into that area and sold off. Look at the momentum. And we are looking at this guy trading at least into this mitigation block, the deep discount of this entire range, the low to the high. We want to see this guy, fall into that area, and it's confluencing with seasonal tendency. The seasonal tendency chart says that we should expect a bearish dollar in this season of the year. I think we are in the June contract currently. We are in the June contract, so we're anticipating a bearish dollar, and I want to see it trade into that level. So the dollar actually repriced into internal range. We have a fair value gap here that was violated. Price just tapped into it on the monthly. On the weekly time frame, we just rebalance that internal range inefficiency. Remember, for every external range liquidity taken, price would retrace into internal range before we expand again to the next external range, which will be that old low, the equal lows by the left right here. And we are looking at the old low there and also the mitigation block right below these levels. On the daily time frame, This is where we frame up our premium and discount. If you put up your Fibonacci between the high to the low, we are above 50%, and we just rebalance that liquidity void, that fair value gap. Look at how we rebalanced it. And also, this is a mitigation block. We tapped into that area. Then I'm seeing a smart money divergence play out this morning between the dollar, the euro USD, and the GBP USD. So this is the 1 hour time frame, and we see there's a cracking correlation. The DXY formed higher high, euro USD formed lower low, but the GBP USD has failed in creating lower low. That tells me that we have a cracking correlation. It's a smart money fingerprint that institutions will usually hide and create their fingerprints to lead a particular direction in the currency market. Okay, so since we have a smart money divergence, that means we're going to expect the dollar to resume that bearish impulsiveness while the foreign currency is going to continue bullish. So how are we going to get executions? We just look at bearish order block to support lower prices. So price has created that smart money fingerprint failure swing here, and I am seeing already, a bearish order block, just that there's a tiny fair value gap above it that has not been traded into, and institutions would usually leave fingerprints like that so that they can take liquidity above that high, tap into that area, or that opening gap right there. You see that opening gap right there also might be an area you want to touch before we start the sell. But if I see price trading to that fair value, I'm going to sell the dollar with my stop loss above that high, and I'm going to see it drop into those areas. So remember, the dollar created a higher high, but the euro USD, let's take a look at the euro USD. At the same time, look at the time here, around 2 o'clock was where we had the higher high on the DXY. On the euro USD, the same 2 o'clock, you see that we have a lower low. So we want to see price also repricing to internal range. There's also a mitigation block there. We want to see it take that equal low and as well tap into that area while the dollar is trading into that fair value gap. So you have lower low on the euro, and on GBP USD we have a failure swing. Look at the same time, 2 o'clock, price couldn't take out that low. That is a smart money fingerprint. All right, so I would like to see this guy as well take out that internal range low right there, that internal range low. And while the dollar is trading into that area, once the dollar is set to move, we're going to execute the opposite on euro, GBP, USD, and the rest of them. So I'm anticipating this guy is going to resume bullish price action into the drawn liquidity. The equal highs, the relative or diagonal liquidity here, relative highs. Price action would want to trade into that area on GBP and euro USD. So while that is happening, let's take a snippet on gold. Gold also, let's look at the weekly time frame. The weekly time frame looks bearish because we have an internal range liquidity that is yet to be traded into the fair value gap right there that has not been traded into. So we would like to see this guy tap into that area right on the weekly. And on the daily time frame, of course, you can see clearly that we have a bearish order block right there. So price, we want to trade into that bearish order block, which would sponsor bearish pricing into okay. So gold as well may want to find resistance currently at the current bullish order block. See that bullish order block that has resisted price for the first time and is resisting price for the second time, supporting price to go higher. We might see gold ignore that fair value gap and just trade higher. Since the dollar is bearish, that means gold as well, it's going to go bullish. Okay, and look at the 1 hour time frame. Price tapped into that same daily bullish order block and created a shifting market structure bullish. Look at the low there, shifting structure bullish. Already gold has even tapped into that fair value, that IOFED there, and started trading higher. right? If I'm going to get a buy again, I would like to wait for gold to take out that internal range low right there. Take it out, then I'm going to take a turtle soup buy right at the low. Once it taps into that low, I'm going to get a turtle soup buy on gold into the next one. Liquidity residing higher. All right, so this is what I'm looking at on gold, and as well the dollar and foreign currency that I just showed you guys. Let's take a quick look at the GBP JPY. The GBP JPY is a commodity asset, and since we've been anticipating the current event that happened on alright, so the GBP JPY has been finding support at the bullish order block here that has been supporting price many times to go higher. On the weekly time frame, still have a bearish order block right above here that is resisting price, that bearish order block there, and currently I see price taking liquidity above that high, that internal range high or structural high right there, and above that high also is a fair value gap. So really I want to see this guy trade into that area. Okay, and because of the event happening in China, because of the lift and reduction in tariff, I definitely we are anticipating a strong yen. And if the yen is strong, what that means is GBP JPY should sell. Okay, so this guy should take liquidity above that high and trade into that fair value gap on the daily time frame. A fair value there. You want to see it trade into that level. And if price trades into that level and creates clear shift of structure on the 1 hour, we're going to sell it again into next strong liquidity, the relative lows right there. So this is my expectation for the dollar, foreign currency, and the commodity asset I just showed you guys. My friends, I hope you like and understand what I just did here. And don't forget to drop your comment in the comment section. And if you're looking to join me on the one-on-one mentorship program, just send a DM. I'm going to enroll you so you get started and be part of the winning team. Until next time, I wish you good luck, good trading. Stay safe.